Ladies and gentlemen, good day and welcome to the conference call of Apcotex Industries Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and a warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Apcotex Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first quarter of financial year 2022. Before we begin, I'd like to mention a short cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management of Apcotex Industries Limited participating with us in today's earnings call. We have with us Mr. Abhiraj Choksey, Managing Director, Mr. Sachin Karwa, Chief Financial Officer, and Mr. Anand Kumashi, Company Secretary. Without much delay, I request Mr. Anand Kumashi to give his opening remarks. Thank you, and over to you, sir.
Thank you, Anush. Good evening and welcome everyone to this earnings conference call for the first quarter of FY22 under review. Along with me in today's earnings call, I have our Managing Director, Mr. Abhiraj Choksey, and Mr. Sachin Karwa, the Chief Financial Officer. I hope you had an opportunity to review the financial statements and earnings presentation, which has been circulated and uploaded on the website and stock exchanges. To brief you on the financial performance for the first quarter of the financial FY22, the revenue from the operations was around 185 crores, with operating EBITDA at 29 crores, with EBITDA margin at 15.82%. While the net profit was 22 crores with PAT margin at 11.83%. As you can see, the results are flattish as compared to the previous quarter on account of slightly lower volume due to second wave of COVID-19 and partial maintenance shutdown at Taloja plant during the month of June 2021. On the capex front, all deep bottlenecking projects will be completed in Q2 of FY22, which will give an additional revenue of around 60 to 70 crores per annum once completed. We have also obtained an initial environmental clearance in Q1 to start the construction for 2 new brownfield projects, one each at Wali and Taloja plant. The total capex for these new projects are expected to be around 140 to 150 crores, which will be incurred over next 4 quarters. On the anti-dumping duty front, on NBR for both the petitions, after a thorough investigation, DGTR recommended an anti-dumping duty, but the Ministry of Finance has decided not to notify the duty. As of now, no anti-dumping duty exists for NBR imports into India. And lastly, the Taloja plant 3 years agreement with the unionized workmen was amicably signed in this quarter. With this, I would like to open the call question answers. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Ankit Kanodia from Smart Sync Services. Please go ahead.
Thank you. So we have got an EBITDA margin of almost 16%. How confident are we that it can be sustained throughout the year, and why?
Thank you, Ankit, for your question. Can you hear me?
Yeah, I can hear you.
Okay.
Please go ahead.
This is Abhiraj Choksey. Yeah. So thanks for your question. As we have been mentioning in previous con calls, and I think you have been part of a few con calls, we have consciously made an effort to increase our margins from sort of the low teens, in fact 10-11%, to almost the last now 3 to 4 quarters, we've consistently been doing somewhere between 14 to 16%. So we feel fairly confident that at least this 14 to 15 number is doable. We are at high capacity margins, high capacity utilizations. That's why it's helping. And therefore, we have been able to also improve our product portfolio, product margins, and manage our customer margins as well as product-wise margins better. We feel fairly confident that, of course, there'll be, a couple of quarters where we may see some ups and downs in our kind of business. That does happen. But on average, I think we're fairly confident of doing somewhere in the mid-teens now.
Okay. Thank you, sir. That helped. And before I move on to the next question, thank you for sharing more details about APCO in the annual report. That really helped.
Thank you. Thank you.
Yeah. And the second question is about the anti-dumping duty. And in the last call also, we had a discussion where we said that if that anti-dumping duty does come, then we are very confident that we'll go ahead with the CAPEX plan. Now that the Minister of Finance has put that on hold, so yeah. Is it on hold, or they've just they're not doing it at all?
No, they are. As of now, our information is that they have not notified it.
Okay.
And for one of the cases, there is also a notification that comes that they will not be, for one of the petitions, that they will not be implementing it. However, there are some legal, processes that we have available with us, which we are evaluating whether to do it or not. But for the last 6 months, there have been no, and in fact, since December 2020, there have been no anti-dumping duties in place in India for any import of NBR. As far as CAPEX is concerned, the CAPEX that has already been approved by the board and which we are going ahead with, both are largely latex projects, which is one is in Valia, 110 crore CAPEX, and another one in Taloja, which will be somewhere between 30 to 35 crores, which I think we've mentioned in our earnings presentation as well.
Yes.
So that we are going ahead with. As far as the NBR is concerned, anyway, we are waiting for environmental clearance for that project. So we have some time to decide. The environmental clearance is expected sometime next year, maybe by April of 2022. Only after that we can go ahead with that project. So we have some time to decide.
So
we can still go ahead with it because, frankly, in the last 6 months we have competed effectively. We have tightened our belts. We have, implemented a few things, reduced costs, it's a question of where we want to allocate our capital. The NBR business, according to us, is still attractive, and we will decide by next year. We have applied for the environmental clearance approval for that project.
And sir, thank you. That helped again. And regarding the export, which is doing really well for us today, so how much are we expecting? As in, I know you can't give any guidance, but any ballpark direction, as in, can we see export doing even better throughout the year? So it's already 24% of that, if I got it correct.
Yeah, it is. This last quarter was 24%. There were two reasons though, and frankly, it's not that we're doing exports for the sake of doing exports. One was, of course, we wanted to de-risk out of India because, if something like what happened, lockdowns, we've seen a couple of times in the last year when India has gone through lockdown. So we were therefore able to quickly, even in April and May when we had this problem in India, we were able to quickly pivot and make sure we, didn't lose sales and were able to sell more in the export market. Now that percentage may vary. It may be 20% next quarter if the domestic market picks up. It just depends. But now we're quite comfortable with this kind of, 20 to 25% exports. And even our exports market are, largely in Southeast Asia and the Middle East, right? That is I would say 80% of our exports happen around that area. Now, what we are seeing currently, for example, in the months of July and even August, from what I hear, countries like Thailand and Malaysia have gone into a strict lockdown because the Delta variant has now, erupted there, which was the case in India 2-3 months ago. So now it's happened there. So there, some of our customers are shut. So, the percentage of exports may vary. The only thing that's important from our point of view is, frankly, that we have now the capability and we've built products, a team, sales and relationships with customers that we can even, we can go, up to 24-25% we're able to do export sales.
Okay. Anything drastic change in APCO build, or it is still a minor portion of our revenue, or do we expect something significant in this year?
We are, in fact, this year we expect to. Earlier, we were in and around the Mumbai-Pune region, more around in Maharashtra. Now we've expanded to Gujarat, MP, Goa. So we're trying a few other territories and seeing how it goes. So we expect, while it will still be a small part of our business, we are seeding it. We continue to seed it. It's a good profitable business, but a much smaller part of it.
Okay. One last question. EBITDA per ton, are we near the peak right now, or do we see more leg from here as well, looking at the raw material prices and all? I know you don't share the exact number of EBITDA, but if directionally, if you can.
But frankly, we feel comfortable with these numbers. I don't know if it's at the peak or not, but yeah, I mean, the raw material prices have been rising for the last few months, as you know. I'm not sure. It's difficult to say, but we feel confident that this kind of EBITDA numbers are possible going forward as well.
Okay. Thank you. Thank you so much for.
Okay. Thanks. Thank you, Ankit.
Thank you very much. Ladies and gentlemen, we would request all the participants to limit their questions to 2 questions per participant. Time permitting, you may return to the queue for your follow-up questions. Also, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Manav Vijay from Deep Financial. Please go ahead.
Yes, thank you. Am I audible?
Yes, you are audible, Mr. Vijay. Please go ahead.
Yes, thank you very much. Satyaj, first of all, I mean, congrats on such a great out of number. I have a couple of questions. First of all, on the XNB latex. So last year when you started talking about the expansion, you started with around 30,000 tons of expansion. Then somewhere you increased that to around 40,000 tons. And then in the latest AGM, you talked about a 60,000 ton kind of an expansion plan. So if you can just first of all explain as to, I mean, what is the kind of expansion that we are looking at, what will be the capex, and what kind of sales you expect to make from that project at the peak level.
So as of now, the first phase in Valia is 50,000 tons of latex. I don't think we had ever said 30,000 tons. It was always somewhere between 50 and 60,000 tons. So right now, as of now, we feel confident that we'll be able to do 50 once the project is commissioned next year. Now it will be sometime in 2022. We will be able to make 50,000 tons per annum annually, but we will be leaving some more space in our civil, in our buildings to add more reactors if required and more equipment if required in the future. But initially, we are going to be investing around 110 crores for about 50,000 tons, which would be around 400 crores of revenue with current prices at conservative levels. In Taloja, we are planning around a 30-35 crore project, again to start off after the monsoons, construction after the monsoons. Again, it will be ready by the middle of next year. That is a project that will give us flexibility to make either 10,000 tons of XNB latex, or we can make other latexes as well, the traditional SBSA. So it will be a combination plant. Conservatively, again, that will be about, I think, around 80 to 100 crores of revenue, 80 crores of revenue. So overall, we're looking at about 140 to 150 crore capex on these 2 projects, besides maintenance capex and so on that would happen, of course, through the course of the year, over the next 12 to 13 months. And that would be about little less than 500 crores of revenue in top line.
Sure. Abhiraj, one of the main, I would say, achievement that you have mentioned in last couple of calls is that you have said that that we want to stick to the timeline. So you believe that this 150 crores or 140 crores of capex in next 12 months without any kind of exigency, maybe, I mean, 1 month here and there is obviously beyond anybody's control, but 12 months is something, 12, 13 months is something that you will be able to finish it off Because since now you have the clearness in place, and the speed at which you move is now up to you. So you believe that is doable?
Yes, absolutely, it's doable. And we, as you said, it's now, of course, it will be more in our control. We were waiting for some environmental approvals, which is what delayed it by a few months. But now, immediately after the monsoon, we expect to start construction. We've already finished the detailed designing of the project. We are already manufacturing this product in reasonable quantities for the last 1 year now. Or more than that. Even before pre-COVID, we were doing it in smaller quantities. But now, of course, we given what happened, we modified some of our reactors to make nitrile latex for gloves in the last 1 year, and we're fairly confident. We have everything in place, right? We have the technology, we have the customers, we have plant capabilities. It's only about project execution. So as you said, 1 month here or there, unless some third wave hits us badly, and of course there are those kinds of challenges where some of our vendors, like for example, even in April and May, when whatever machinery we had ordered, some of it got delayed because of the when some of them were shut, especially in the north. So barring those kinds of things, we feel fairly confident about a 1 year timeline.
Okay. Now you also mentioned that apart from the 50,000 tons in the Valia plant, you will have some space. So after this expansion, I believe that is a plot of around 22, 23 acre, and currently I think you are using some around 7 to 8 acres. So post this expansion, how much space you will still have to do any future expansion apart from the NBR that you are planning?
As of now, we are looking at this nitrile latex project of 50,000 tons, and as I said, we'll be able to add some more. So we have enough space maybe to increase capacity in the future by up to 50%. Exact numbers I would only have to work out. I'll be able to tell you by end of next year. But for nitrile and then NBR, and yeah, that's it. I think beyond that, I don't think we'll have more space.
Okay, and for this 150 crore, so I believe you have around 80-90 crores of cash on books. So you would want to, let's say, raise some debt, or you believe that the internal accruals plus let's say that you have the portfolio, all that is sufficient to fund this expansion?
Yeah, frankly, we feel confident that the internal accruals, and of course, if we use all the cash that we have on our books, then that's sufficient to fund the next 1 year. But we do plan to take on some debt at least, because we do want to, in our kind of business, we have seen in the last 10, 15 years, there have been cases where it's always good to have some cash in the books, because the volatility in raw material prices, sometimes availability, sometimes what happened with COVID last year, So we would not use up all the cash that we have on our books. So we would take debt, and as of now, we are almost debt free. So we have the ability to raise some debt at least.
Sure. But last question from my side is that, so I've been saying guys, for last now almost 10 years. So in last 1.5 years, you've added some people at the top level. So you believe that now the size of the business has become so big that you need extra hands to take care of it?
Yeah, as the business grows, I'm sure you would agree that, you need people at all levels, and that's what we do. As and when we think, we require people, we recruit.
Sure. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Manoj Sejpal from Awadh Developers. Please go ahead.
Hello.
Yes, Mr. Sejpal. Good evening.
समझ लो सर अगर सेकंड क्वार्टर में लॉकडाउन
Sorry to interrupt, Mr. Sejpal, but आपकी आवाज, we are not able to hear you. Can you speak a bit louder?
हेलो
हाँ जी, बोलिए
समझ लो सर अगर सेकंड क्वार्टर में लॉकडाउन नहीं आता है तो हमारा रेवेन्यू है वो कितना % इंक्रीज हो सकता है कंपेयर टू क्वार्टर 1?
सेजपाल जी, हम वैसे तो क्वार्टर ऑन क्वार्टर गाइडेंस नहीं देते हैं. Overall business is strong. Things are looking good. We don't give exact guidance on percentage कितना बढ़ेगा. और overall I can just say that business is looking okay. There are obviously challenges, as I mentioned earlier. अभी currently हमारे थोड़े export markets में lockdowns हैं, like Thailand, Malaysia. तो वहाँ से challenges है, but India market has picked up. Also, this is a monsoon season, so a few of the markets, a few of the industries that we are catering to, like construction, carpet, and paper, this is their sort of not their peak season. So those kinds of quarter-on-quarter challenges can happen. But overall, looking at overall, nothing substantially changes in the business quarter-on-quarter.
Okay, thanks.
Thank you.
Thank you very much. Next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question.
Sorry, Ms. Mahavla, but may I request you to speak a bit louder?
Sure. I hope this is audible.
Yes, it's audible.
Yes. Good evening, sir, and thank you for taking my question. So firstly, I'd like to understand that for the kind of growth that we're witnessing, is this all volume growth or is it some kind of value realization growth that we're witnessing?
Compared to which period?
Obviously, while I understand that Q1 is on a low base, but in general, over the last 1 year, for the kind of growth that we've seen, just wanted to understand that is it a volume growth or is it a realization growth, or are we seeing a mix of maybe the volumes are going up, but maybe the realizations are correcting? Just want to get some kind of sense.
So if you see the last 1 year, then of course we've had mostly it's around volume growth. But if you see the last 1 quarter, yes, realizations have also gone up. So it's a combination of realization and volume. For example, if you compare Q1 of this year, which is this quarter, compared to the previous quarter, which is Q4 of last year, the top line is about the same. It's about flat, but frankly, our volumes have been a little bit lower. We don't give exact numbers, but I would say in the single-digit percentage lower. And the main reason is because we had a long partial shutdown in our Taloja plant, which affected production, and partly also because of the lockdowns in India that affected sales in some of our segments. Some of our customers were shut in, especially in the north, for weeks, 3-4 weeks, because of a lot of COVID cases. So obviously those kinds of things happened in Q1 that were not there in Q4. But by and large, if you were to compare a whole year, it's been largely volume growth driven.
Got it. Thank you, sir. The
Yeah.
other thing that I wanted to understand was that this quarterly run rate of about 180-190 crores that we're doing, we can maintain this with our existing capacities, or is there scope to improve this with the current capacities?
Yeah. So we have invested in the last 5-6 months, and we continue, and I think that's also mentioned in the investor presentation, is that we have spent some amount for debottlenecking, and which will increase capacity by about 10-15%, somewhere between 10 to 15%, which will obviously keep us going for the next 1 year. And after that, of course, these 2 new projects are coming up as well by next year.
Sure. And the last question that I have is for the new capacity for the brownfield that you're doing that is expected in FY23, you're expecting it to be utilized in about 2 odd years, or in general, does it take longer to get utilized?
I think that would be a conservative assumption, but we obviously would like to do it quicker than that. It will take time as soon as it gets commissioned, because a lot of our customers would, because even though it's in the same plant, it's a new plant, right? And so it's a new building, new reactors. So our customers would sort of slowly ramp up. I'm hoping we can do it in 6 months to 1 year, but certainly, definitely in 2 years we'll be able to ramp it up.
Okay, thank you, sir.
Thank you very much. Next question is from the line of Satyan Vadva from Profusion Capital. Please go ahead.
Hi, you mentioned that raw material prices are inching up. Just wanted to get a sense of how much end product prices are moving as well, so that is there likely to be a compression in margins in the near term or in expansion? And B, if you could shed some light on when the new brownfield expansions will be ready and how much they would contribute to the top line in FY23, and what is the full capacity top line contribution likely in FY24 at current pricing?
To answer your first question, we are in general our endeavor is always to pass along the cost increase. And by and large, we've been successful. So even, for example, in Q1 compared to Q4, we were able to pass on the cost increase. And in fact, we may have done a little bit better than that. Therefore, our EBITDA margins were frankly a little bit better than or around the same as Q4. Or our EBITDA was around the same as Q4. As far as the projects is concerned, look, we expect it to be sometime, by the next call, I should have a more accurate number, because we have recently received these approvals and our projects team is now reworking the entire timeline and schedule, but we expect it to be sometime in the middle of next calendar year. So sometime in the middle of 22. And as I was telling the previous caller that we'd want to ramp it up in less than 1 year. So it's very hard to exactly pinpoint what would be the revenue extra generated only for FY23. But overall, as I said, at full capacity with the new volume, we expect revenue of about 500 crores to be generated from the new capex.
But how much was that at full capacity?
500 crores per year. Additional.
500 crores. Okay, great. Thank you.
Thank you.
Thank you very much. Next question is from the line of Abhishek Basumalik from IntelSense Capital. Please go ahead.
Hi, thanks for taking my call. I just wanted to understand a little bit, on the lay of the land for your latex gloves space, because I've been reading up a little bit and I find that there is I was looking through, chemicals and Kumo and some of the other players in the space, and they seem to be saying that there is a very large demand which is there. So basically wanted to understand, also top gloves. So trying to understand what are your thoughts on the demand scenario and what kind of volumes you're expecting, say, in the near term or the medium term, and especially when you're competing with other MNCs. And what would be your competitive advantage if there is any?
Yeah. So one is that even pre-COVID, we had identified this product range way back in 2015-16 as something that was worth looking at because of two reasons. One is general, the level of hygiene going up in Asia, nitrile latex or nitrile gloves taking more of the market share from natural latex gloves because they have some inherent properties that are better than natural latex gloves, and the competitive scenario or the competitive space being limited. There are a handful of players, mostly in Asia, that manufacture this product. So we had identified it 4 or 5 years ago. It took us 2-3 years to develop the product. We started selling, started building customer relationships, and now we're at a stage where we're selling reasonable quantities of this product for the last 1 year and then investing more into it. So overall, I would say, look, the space of nitrile gloves and latex pre-COVID was obviously attractive. And now, given what's happened with COVID, obviously it's expected to be even more attractive for the next 1 or 2 years, given overall the hygiene levels and, overall vaccination drives also, which will be continuing for the next couple of years. We'll all need to get boosters at some point, even after your first 2 shots and so on, where also gloves are going to be used. So, and Asian countries typically had much lower glove usage per capita, glove consumption per capita, which I think will also, or we think, and as per all reports, are going up. So all this makes it an attractive sort of segment to be in, both for glove manufacturers as well as the raw materials for glove manufacturers. As far as Apcotex is, of course, we do have certain competitive advantages. The one is our capital cost.
Sorry to interrupt. Before you get there, could you quantify in some manner what kind of growth can be possible? What are the numbers look like, or possibly what is the market size that you're looking at?
I have all these numbers not with me at the current immediately. Number one, number two, we don't share details of the market research that we have done because we believe that's proprietary. But having said that, even pre-COVID, the expectation was that this market would grow at 12 to 13% per annum. Obviously, last year the growth has been phenomenal. That's not likely to continue, that kind of growth, but at least 10 to 12% per annum is something that we see easily growing over the next 5-7 years. And given that even at 50,000, 60,000 tons that we plan to sell, even up to 100,000 tons, it won't even be, according to me, maybe 5% of the global market for nitrile latex. So we're not aiming towards a high market or high market share, which of course some of these guys already, like you mentioned, a couple of players in East Asia, they have larger plants than ours, and they do have certain advantages in terms of economies of scale. But I believe we have certain advantages in the way we have developed the product and the way we make it in terms of cost, as well as some amount of quality parameters also where we think we're stronger than them. So we do have some competitive advantages as well.
Okay, cool. Thank you. Thanks.
Thank you.
Thank you. Next question is from the line of Nikhil from Perpetual Investment Advisors. Please go ahead.
Yeah. Hi, Abhiraj. Congrats on a good quarter. So my question is about IOCL has announced plans to build a styrene plant in Panipat, which might take a couple of years. And if we assume that another company plans to add a plant for acrylonitrile, we'll have all three monomers being produced in the country. So what is your opinion on how does this change the downstream industry? Does it open newer markets, a market for newer products for us? Or will it only help in reduce of working capital and help with logistics costs and further increase the pace of import substitution?
Yeah. No, absolutely. I think it's absolutely critical in terms of having some of these monomers, which I believe are critical building blocks if a country wants to develop in industry, a downstream industry. Because more than the cost, I think the issue is when you have security of supplies and when you have strategic players, strategic supply of these products in the country, it really gives people like us a huge level of confidence to put in more investments, downstream. Today, one of the things that we look at is these kinds of things. We are unnecessarily, as you said, having large inventories, more working capital, and we're still dependent on imports for a lot of things. So acrylonitrile, you mentioned just a few months ago, there was a huge shortage. In fact, a lot of companies using acrylonitrile in India had a shortage. They had to shut down their plants for 2-3 weeks. Those kinds of things don't happen if there is at least some amount of inventory or some amount of supply that's within India. So I think it's extremely critical. Whether we'll be able to, just because of that, have new products, I don't think so. I mean, that's an internal issue. That's our internal R&D, and that's, depending on the competitive landscape. So that's a different issue, but it will certainly give us a lot of confidence to invest more.
Okay. So, I think that more or less it will increase the pace of import substitution. Then it will make you aggressive in terms of capex going
Absolutely,
forward.
Yeah, because, for example, going forward, once both our plants are completely utilized, and we've been discussing at the senior management level and the board level, is also that, if we want to, the next phase, if we want to do a greenfield project, one of the important considerations is raw material availability. Then why would we, there is option to do it in other parts of the world. Why do it only in India? And raw material availability is a huge consideration. By then, if there are raw materials that are available in India, then, that makes the case for India better for us. So, yeah, of course, that helps.
Yeah, so I think you sort of just touched on my next question. So I wanted to ask, so now if you are planning a third plant, can we expect it to be in a petrochemical complex where there is consistent supply of butadiene, so which will again help you save on working capital and logistics?
Yeah, absolutely. I mean, it's not easy because we have to work with other parties to make that happen, considering we don't have our own petrochemical plant. But certainly, yeah, I mean, that's one of the big considerations for future expansion.
Okay. That's it for me. Yeah. Thank you and all the best.
Thank you. Thank you very much. Thank you, Nikhil.
Thank you very much. Next question is from the line of Amar Maurya from AlphaCurate. Please go ahead.
Hi, Abhiraj. Am I audible?
You are
yes,
audible,
Amar.
but
go ahead.
Feeble. Mr. Maurya, please speak a bit loud.
So, Abhiraj, my question was pretty long term. I had watching this company from last 10, 11 years. So one thing is that there is a fair amount of visibility you reaching to 1,000 crore revenue either by 23 or by 24. Now, the thing which I asked you 10 years back that,
broadly at that point of time you were having 5 chemistries which were at certain level and you were already a market leader. I think the same kind of situation now looks in a majority of your chemistry except the gloves latex. So how do you plan to change the whole course of the business, or I mean how you plan to include new products into the business so that the next level of growth can come faster and probably the size which we are at 1,000 crore can become double in next 3-4 years.
Yeah, so frankly, we have in the last few years seen opportunities. What we have done is we have realized what our strengths are and played to our strengths. Therefore, the acquisition that we made 5 years ago was also with an objective that, look, we understand the chemistry. It was a new product and new market for us, but we understood the chemistry and we added value. We turned around the company. And now we're building in that facility because at that time also we knew that nitrile latex was something we wanted to get into. Similarly, we do have other products on the horizon which we are seeding now, but obviously those are things that we don't talk about, and it will be a little premature to talk about that. But certainly we do have plans to try and develop other products, again keeping in mind our strength and keeping in mind the market opportunity. We do have a few things in mind that we're working on.
So those products are a large size product kind of gloves latex which can take you global and which can basically give you a pretty larger runway than the earlier ones?
Well, there is one or two products that are more specialty, don't have the kind of global market size that nitrile latex, for example, does, or styrene butadiene latex, for example, does. But they are more niche products, but certainly large enough for a company Apcotex's size, which is, as you said, for 1,000 crore company, if we need to grow to the next level. We are also mindful of we're conservative in terms of investment and taking risks, taking a lot of debt and so on. So we will take it step by step. For now, I think our hands are full for the next 2-3 years. And at the right time, of course, we would be, talking about the future plans for growth. And of course, we are open to also not only investing in brownfield or greenfield, but also potential acquisitions that could add value.
Got that.
Yeah.
Thank you, sir. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Rajesh, a retail investor. Please go ahead.
Hello, sir. Am I audible?
Yes, you are. Please go ahead.
Yes.
Yeah. Thanks for taking my question. So this is regarding this Valia plant. It was shut down in the beginning of this month, right? Is it up and running now?
Yes, it was maintenance shutdown we needed for about 10-12 days. It's up and running now.
Okay, thank you. And with the Maharashtra facility, is there any impact because of the recent rainfall?
No, fortunately not. We are in the Taloja area, which is not in the parts of, it's in the Raigad district, but not in the parts where there was heavy rainfall. So we've had no impact on production because of the rainfall.
Oh, okay. Okay, thank you. Thanks, sir. That's all from me. And all the best for your future.
Thank you very much.
Thank you. Next question is on the line of Farokh Pandole from Avesta Fund Management. Please go ahead.
Yeah, hi, Abhiraj.
Hi, good evening, Farokh.
Hi. Just a couple of questions. Firstly, this expansion at Valia, you mentioned 50,000 tons, and you also mentioned that you were making provision for a further expansion, at an appropriate time. So what is that, given once this 50,000 comes up, how much further can be expanded and at what cost?
I alluded to the fact that we are at least making provision for up to 50% more expansion. And it would be at obviously a marginal cost, additional marginal cost. We haven't exactly worked that out, and if you don't mind, let's get going. The idea was to first sell this 50,000 tons, make sure we are currently doing a good volume, but this would be a different scale of operations. So we just wanted to first stabilize and then take a decision on the further. But obviously it would be, let me put it this way, the asset turn ratio would be much better than what it is currently.
Got it. And just wanted to get some sense on, this finance ministry not notifying on the anti-dumping duty so assuming, a status quo on that front, what will be the determining factors for this NBR project, or could it also be that you may shelve the NBR project entirely and look at maybe new products, or maybe look at expanding gloves capacity further, or what's the thinking? I mean, I don't expect you to commit to anything, but just in terms of what are the deciding factors for whether this will go ahead or not, presuming things remain status quo?
So good question. So I just want to mention 2-3 things. One is that for the last 6 months, there has been no anti-dumping duty in India, and we have competed effectively with all the steps that we have taken. So we feel fairly confident that NBR also, we are quite competitive at these levels. If we do decide to go ahead and double the capacity for NBR, obviously we will become even more competitive because some economies of scale will start kicking in. Number 2, the Indian market itself will be larger. Is large enough. We're even currently at only about 25% capacity market share. So we feel the Indian market itself has that. And the third important factor is just a month ago, one of our large competitors has announced they're coming out of the NBR business by December. So, we'll wait and watch. We have applied for environmental clearance for that project as well. We expect to get it sometime next year, calendar year in 2022. Given our experience over the last 6 months, I don't want to commit to which month or which quarter, but sometime in the first few months of 2022 is the current expectation from what my team tells me. So I think we'll take a call on, we'll have another year to decide on that. Also from a risk point of view, we want to focus on the current 2 projects that we've taken up, finish those, and by then we'll decide. And the issue is, I frankly don't think, I think the NBR market personally, I think will be attractive in India to invest as well. But it will depend on where we want to allocate our capital at that point.
Got it. Okay.
So that's the thinking. I hope, as I said, we haven't committed to it, but we are optimistic that it would work out. And we are leaving space in Valia for now. And we may take up that project next year.
Okay, that's good enough. And just lastly, if you could, you'd mentioned earlier, one of the earlier questions was regarding the interim 12 months before the new capacity, the 2 new projects go on stream. Is it fair to assume a 10-15% growth between volume and price for the next 4 quarters going forward in terms of revenues, given that, as I said, we are in this zone of being high on our capacity utilization at this point in time, and still 4 quarters away from the new projects.
Yeah, and as I said, we have invested some for debottlenecking in the last few months, and which will all come on stream in Q2. Some of it has already started playing out. So, yeah, I think we should be okay for the next 1 year for 10 to 15%. Yeah.
Great. Thanks a lot, Abhiraj, and all the best.
Thank you, Farooq.
Thank you. Next question is from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for a great set. Sir, now that we don't have any anti-dumping duties in place for the NBR, so just wanted to understand the pricing delta between our pricing and what is the landed price?
So look, we are forced to price it at whatever price it comes in at, right? Because we have to compete. If we want volume, even if our price is, 5% higher, buyers won't buy from us, or 5 or 10% higher. It's more of a commodity than latex is in that sense. So the pricing at the end is the same. Yes, there was injury. There is, we want some duty, and we had a very good case for duty. The DGTR, which is under the Commerce Ministry, actually went into the details. It was a 1-year detailed investigation, and for both petitions, they did impose some duty, different types of duty for both petitions, but they did think our case was strong and agreed to it. It's unfortunate that the Ministry of Finance did not notify it, and I think it's not only us. From what I understand, this is happening for a majority of the cases these. So I hope that answers your question.
Yes, that does. Just also wanted to understand how far are we with respect to our historic high realizations or margins, especially in the NBR portfolio?
No, NBR portfolio, quarter on quarter there are changes, of course. Certainly NBR in the last 3 to 4 months has not been the historic high margins because we went through April and May where we had really because of the lockdowns, especially the automotive industry in the north went through some trouble. So it hasn't been historical highs recently.
Right. So just wanted to understand how far are we? Is it a 10% or a 20% lower in terms of pricing or in terms of margins?
I don't exactly. Sorry, I don't have the exact numbers with me right now.
Right. No issues. And just one last question, if I go ahead. We are catering to varied set of industry, the latex. So how is the overall sense for FY22? Which industry you feel can grow faster and which can be a laggard or which can be a flattish industry?
We supply, as to several industries: paper, carpet, construction, auto, gloves, a lot of industrial rubber parts. And what we've been seeing for the last 6 months is a fairly, at least in India, fairly bullish trend, and everyone seems to in general feel that this year is going to be quite strong for them. However, we have to wait and watch, and the way we are building our business at least is that we're making sure that from an industry point of view and from a geographical point of view, we're de-risked. And in case one of the industries doesn't do well even, at least some of the volumes can be pushed into another industry. So we're trying to de-risk from that. But yeah, in general, it seems that our customers seem to be quite bullish for the next year.
Right. Yeah, that was helpful. Thank you for the detailed answer.
Thank you.
Thank you. Next question is on the line of Vinay Nagori, an individual investor. Please go ahead.
Hi, Abhiraj. Congratulations on the great set of numbers. So my first question is, now for the last 3 quarters, we've been spending on repairs and maintenance to make our reactors fungible. So going forward from the next quarter, as you had guided before, do we expect some operating leverage coming from here?
Frankly, I don't know where your question is coming from, but I don't think repairs and maintenance is that large a line item that a significant advantage would be there. And look, as whatever is required, both our plants are now fairly old, 30 to 40 years old. And so as and when repairs are required, we do them, and we ensure that assets are maintained at a high level. So there are some quarters where we have higher than normal repairs and some quarters that are better. But I don't think it's going to be a big factor in terms of overall margins or anything of that sort.
Okay, and just wanted to understand. So now, 3 years down the line, say we'll be reaching a top line of around 1,100 crores. So we'll be having a very strong cash flow. So then after that, are we thinking of, say, going downstream in NBR or, say, brand building in APCO build? Are those logical steps am I thinking into?
As I said, our hands are quite full for the next 2-3 years, I think, if we go ahead with all the plans that we have. I think it's a little premature to talk about it, but certainly we have, besides seeding products and businesses that we are already doing, we also have opportunities at that point. And when we feel that we are comfortable amounts of cash, again, we are going to take on some debt this year. And as and when we feel comfortable that we have enough levels of cash, we may even look at, other opportunities, inorganic opportunities. So both options are on the table.
Okay, and I just wanted to understand how many have you added a good amount of customers in the last 1 year, and have you developed some new products?
Well, this for nitrile latex for gloves certainly has been a new big industry for us, and we have added quite a few customers in that space. As far as the other industries are concerned, we obviously all add in, but it's a good point. One of the things we, at least I don't track very closely, is how many number of customers we have, but I know our sales and marketing department tracks it. Next time I'll perhaps get that number for you. But certainly we add every quarter we add new customers. And even within the industries we are grades are always increasing or tweaking or changing. We always find niche applications within those industries like paper and construction as well.
Okay.
Yeah, I hope that answers your question.
Yeah. Thanks a lot. Best wishes for future.
Thank you.
Thank you. Next question is from the line of Deepak Mehta, an individual investor. Please go ahead.
Yeah, thanks for the opportunity and great set of numbers in this quarter, sir. So my question is around the product R&D. What is the pipeline for new products and R&D?
Yeah, thank you, Mr. Mehta. Look, we have a pretty good, strong R&D team, and again, within the industries that we are in, we are constantly doing, work for improving the number of grades, increasing the number of grades, improving our current product range, reducing costs wherever we can. And as far as completely new ideas are concerned, we have a few, but as I mentioned to one of the previous callers, that's something we don't really talk about till we are sure we are going to invest in that business and go ahead with it.
Okay, so my next question is around you mentioned that one of the competitors is exiting the market and we have market share of 25%. So if you can throw out how much market share is that with that competitor, and what when in terms of market share we can grab due to this exit?
Well, I think this competitor, at least in India, the market share was low. It was in the single digits, I think maybe 7 to 9% from what I recall last. But the bigger issue would be that with one big plant shutting down, or they are diverting the capacity elsewhere to other products, not making NBR. They're not going to make NBR, from what I understand. It would, of course, overall, globally or in Asia, help the entire demand-supply ratio. And I'm not sure if immediately we'll be able to increase market share by too much, because we are already running at pretty close to 100% utilization for the Indian market. So if we feel the margins are good enough, next year we will, double the capacity of NBR and then take a call going forward.
Okay, so thank you so much. I will get in the queue.
Thank you.
Thank you. Next question is a follow-up from the line of Manav Vijay from Deep Financial. Please go ahead.
Yes, thank you for the opportunity once again. I've asked a couple of questions from me. So now, in next, let's say 12 months, you will have your XNB project ready. And you also mentioned what kind of sales it can generate for you. So help us to understand one thing is that as far as your current existing business is concerned, there, the number of customers that you have are large. Whereas as far as XNB is concerned, there the number of customers would be lower. So you believe that once you have this entire sales in your P&L, the volatility in margins that you have will actually subside to a large extent, or we still continue to have, depending upon the way raw material prices move, that volatility?
I'm not sure if even nitrile latex for gloves, there are many customers all over the world, mostly in Asia, of course, these days. But in the future, I believe America also, we've had a few, now America and Europe, there are a few glove manufacturers that are coming up from what we hear. So they're also interested in importing latex from Asia. So I don't think the number of customers are bearing on margins. It's just the volatility of the raw materials that we're in. And sometimes we do, because we're importing so many raw materials, sometimes we do get stuck with higher cost inventory. That does happen, and therefore our margin quarter on quarter could get affected by a few percentage points. As I said, it's very hard to predict what happens. I'm just saying historically what has happened is that margins have got affected quarter on quarter. Overall, if you see, our endeavor has been, if you see annual numbers or take any 4 or 5 quarters together, our endeavor has been to slowly improve margins, and we have done that by and large. From the single digits to the last, I would say almost 1 year, we've been in the mid-teens, right? Between 13 and 16% for the last 4 quarters.
Actually, Abhiraj, my question was slightly on the longer term. I mean, yes, let's say so in the last 10 years, you have increased your margins from around, 8-9% on almost 15-16%. Is that because of the volatility in raw material prices, your margins move very sharply? I mean, yes, you always, will be in a position to pass on that with a certain time lag. But because of the, let's say, lower number of customers, it's all relative. On the XNB side, the margins predictability will be better or not? That is my sole point.
I'm not sure. Frankly, the answer is I'm not sure. As I said, it's a new business for us as well. And as we do higher volumes, I think margin predictability would be a little better, but I'm not sure, because suddenly if raw material prices, or if we are stuck with some high cost raw materials and, overall market falls for whatever reason, then the margins will fall in that segment as well. So I'm sorry, it's not a great answer, but the real answer is I'm not sure.
Sure. My next question is, so let's say whatever little understanding I have on the XN, as far as the NBR rubber is concerned, so auto is a large part of, a business for you, of your current business. You believe that the way, whatever changes that that is happening on the EV side, you believe that that is going to have any kind of impact on the demand of NBR over next 5 to 7 years time frame?
The short answer is absolutely yes. The long answer is that overall 30 to 35% of the Indian NBR consumption is in autos, according to our studies that we have done. And within autos also there's 2-wheelers, 3-wheelers, passenger cars, trucks and buses. So obviously with that, we do think in the next 5 to 10 years, especially 2-wheelers, 3-wheelers, there'll be a large amount of electrification that would happen. But if you see the remaining will grow. So overall, while the growth on the NBR market may not be as strong as some of the other products and segments that we are in, I do feel that there will be a good single-digit growth either way, with or without electrification. And of course, electrification is going to happen. There's no question about it.
Okay. My last question to you is that now you mentioned that because of this your debottlenecking, we will have around 10% kind of a growth. Let's say for next. I was till the time the expansion comes in place. So would it be safe to assume that the Q1 sales becomes a baseline, and that whatever you do, let's say whatever that will come from debottlenecking will be on top of that?
Yeah, I would say in Q4 and Q1, so the previous quarter and this quarter, we have been at somewhere between 90 and 95% capacity, almost 100% capacity utilization. Anything above 90 is almost 100, I would say. And the only reason is because in some products, obviously our capacity is not absolutely, we can't make every product in every aspect that we have. So there are some products that were at maybe 80-85% capacity utilization, and some products were 100%. So I would say, yeah, if you see the last 2 quarters, they would be a good benchmark or a good base.
Okay. And what kind of tax rate is possible for this year and next year? Because last year also your tax rate was around 22%. Q1 you are at 21%. Whereas normally, so let's say if you move to the new regime, you will be paying 25.6%. So what would be a safe number to work with?
Yeah, I think we had some carry forward, that credits that we could take for a couple of reasons. I believe they've come to an end. We don't have any more credits, so I think the safe assumption would be 25%.
Sure. Thank you and all the best.
Thank you.
Thank you. Next question is from Darshita Shah from Axis Securities. Please go ahead.
Hi, am I audible?
Yes, you are. Please go ahead.
Yes, go ahead.
Hi. So thank you for the opportunity and congratulations on the good set of numbers. Most of my questions are already answered. I just needed the revenue contribution between the segments that we have, that is latex, HSR and NBR, for the current quarter and also for FY21 if possible.
FY21, I think it was overall about 55% latex and 45% rubber. In Q1, I think it was more latex because some of our rubber customers were affected due to the lockdown in India. So I don't have the exact number, but it would be more latex, maybe 60-65% latex in Q1. But on average, I think we expect latex to be going forward at least about 55-60% and the rest rubber. So.
Okay, all right. That's it from my side. Thank you. Yeah, that's it. Thank you.
Thank you very much, Misha.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to the management for closing comments. Over to you.
Thank you very much. Thank you for once again joining us, ladies and gentlemen. We look forward to meeting you next quarter again. Till then, stay safe. Thank you again.
Thank you very much. Ladies and gentlemen, on behalf of Apcotex Industries, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.